we get then to the first corporate on our show, and that's Jammu and Kashmir Bank. The bank's slippages and gross NPAs rose sequentially in Q3. We have Amitava Chatterjee, MD and CEO of J&K Bank, now joining us on the show. Thank you very much, sir, for joining in. Before we get to the asset quality, first, if you could talk about the loan growth of the company. It's been on the weaker side in Q3. What was the reason for that, and what can you guide for Q4 and even FY26 in terms of a loan growth guidance?
Good morning, and thank you for this opportunity. Honestly, I would not read much into the muted loan growth during the third quarter. Overall, there has been a growth in the YOY side. And I believe looking at the kind of pipeline that we have in both the J&K, because we have a unique structure of the presence, very strong presence in Jammu and Kashmir, Ladakh, as well as the rest of India. So looking at the pipeline that we have at both places, I believe that fourth quarter would be much better than the third quarter as far as the loan growth is concerned. I wouldn't look much into the muted growth during the third quarter. There were quite a few reasons: the hard winters, the fallout of the state elections, all those things in the entire banking machinery was involved in that. So it's okay, maybe for a quarter not having a big growth, but I still stand by the guidance given by the bank at the beginning of the year.
So your guidance was 15% that you shared at the beginning of the year. So you're saying for FY25 and FY26, you still hold on to this guidance, with retail being 70% and corporate being 30%.
Yeah, we will stand by the guidance, primarily because I believe that the appetite in this geography is very strong, and the developmental activities which are coming up in these areas, in the states of Jammu and Kashmir, Ladakh, is substantial. And being the most important bank in this geography, we will have a major share in all those developmental activities that are going to come up in the infrastructure space, as well as the railway line coming up gives a huge opportunity in the business area also. And also being present in the rest of the country gives us a huge opportunity growing outside the state as well. So I will stick to the guidance.
Understood that. Mr. Chatterjee, this is the first quarterly results that's come about, after you've taken over the bank, and you've also managed to hold on to the guidance. Number one, what is your view as far as FY26 is concerned? What is the targets that you've set internally, especially in terms of loan growth? And also, what is the outlook, number one, on slippages? Do you expect it to, get further deteriorate from here on? And subsequently, what are the kind of recoveries you anticipate?
See, I believe that the recoveries would be better. I would also see the slippages the slippages have been below 1%. So it will still be low, I believe. I am not expecting further slippages in a major way at all in the entire bank as a whole. And we would also like to concentrate on the existing NPAs that are there in the rest of the country outside J&K. Primarily, the NPA levels in this geography is lower than the rest of the rest of the country. So we will be focusing on those. So as NPA is concerned, I believe 26, if you ask me, I would say that we can be well in line to bring the gross NPA levels to 3%. Okay. So that is what I believe. And loan growth, definitely 15% going forward next year also. Definitely, we will be able to achieve.
Okay, 15% loan growth, and gross NPAs, which are now at 4%, should come down to below 3% or 3% by the end of FY26, and slippages are under control. What about net interest margins? Your NIMs were at 4% and they've picked up a bit. Can you maintain NIMs at 4%, sir?
See, the strength of this bank is the market share in this geography, and we have a substantial CASA, although it has come down over a period of time, but still this geography, we still have a 50% of CASA. So that gives us a better opportunity to retain our NIMs, and definitely going forward, I think we'll be able to at least maintain the NIMs at this level, if not slightly improve them.
Okay, so last question from our end. How would you look at the NIM trajectory from here on in case there is a rate cut that does come about? And also a word on credit costs. How do you expect it to trend in Q4 and FY26?
See, if you look at the history of credit costs this year, it has been negligible, nil. So we will continue with that. The provisioning done by this bank over the last 2 to 3 years has made it quite stable that way. NIMs, as I said, we would like to maintain the NIMs at around 4% going forward, even after the rate cuts, because we know that, as I said, we have a fair share of CASA in this geography. So I believe that we'll be able to maintain the NIMs and in spite of the rate cuts.
Okay, thank you so much, sir, for joining us, giving us your view on how Q3 panned about, and wish you all the best for Q4 and FY26. Well, we'll now slip into a short break. Up next, we'll discuss what's buzzing in the commodity space with Manisha Gupta.